So welcome to my blog. My name is Steve Goldberg, and I'm going to try to talk you through some of the events that are going on in the stock market. So on Monday, we can see here, Monday, that the big headline was that the Dow fell over 600 points. And if I'm a typical sixth grader, a couple questions I probably have is, first of all, what is the Dow? And then second of all, is this a big deal? So how could I find out what the Dow is? Well, I could probably ask my teacher, and he or she would say, well, Dow stands for Dow Jones Average. So we could do a quick Google search for that, and you can see there are a bunch of different ones you could look at here. I found this one here at Google Finance was useful. So let's click on that. And when we do, we will see a chart, which sadly is taking a moment to load, but there we go. So today, well, it's early Wednesday morning. On Tuesday, the market came back up by 429 points. So you can see it started the day down here at about 10,080, and it ended the day up here at 11,239 at what's called the close of the trading day. So let's get the bottom of that in there. So you can see this is where it was on Friday, and it's been downtrending, and then it popped back up a little bit on Tuesday. So if we wanted to look at a 5-day, so this is what we have here is a 3-day range, Friday through Tuesday, and it's down 1.26% for those 3 days, which doesn't seem that bad. But if we make it a 5-day range, now it's down 7%, 7.5%, and down 900 points. And if we back up to a month, we get a little more context. The situation looks a little bit worse, down 11.2%. 3 months, about the same. 6 months, not quite as bad. And in terms of a year, it's actually up. And you have to back up to 5 years to see that this was the big dip in 2008, that because we started reading about this article, we're trying to see is this drop comparable to what happened in 2008 when a great deal of value was lost. So we can also change this around. We can say, okay, I want to see what happened from, that looks like the middle of 2008. So let's do, make the year here 2008, and see what happens. Enter. And you can see there, and if you want to see by the end of 2008, so let's do, I don't know, March of 2009. And that's a pretty massive drop, 43.53%. But as we can see in the bigger picture, and there's the 10-year, there are ups and downs, and there'd been this big up from 2003 to 2007-8, and we've since dropped back down a bit. So that's how we get a little bit more context and use some math to try to get some sense of what is going on in the stock market. Thanks for listening.